Park Place Investment welcomes you to another episode of Investment Cubed, where we talk about the world of commercial real estate and real estate financing, Silicon Valley and technology startups, and investment and personal finance.
Hi everyone, welcome back to another episode of Investment Cube. Today we have an amazing guest here to talk about his latest deal, an 88-unit apartment complex in Galveston, Texas. Larry Kolster is the owner and founder of QMJ Properties alongside his wife Michelle. His focus is on acquiring Class C apartment buildings and using his extensive real estate expertise to add value to the properties. QMJ Properties purchases underperforming units at a substantial discount and provides superior property management alongside with updates to the units to maximize value, and a goal to resell the properties after a 3 to 7 year hold. Their current portfolio includes over 7 apartment complexes with over 1,000 units and a combined purchase price of over $100 million. His hobbies include tandem bicycle rides, trips to off-road parks in his Jeep Wrangler, golf, and relaxing on the beach. He also enjoys spending time with friends and family, especially his grandchildren.
Hi, I'm Larry Kolster with QMJ Properties, and I'm glad to present this opportunity that we're partnering with Solid Door Investments to present. Let me tell you a little bit about my experience in real estate first. I got started in real estate in 2002. I created a company called Boardwalk Properties as a real estate holding company. I purchased, sold, and rented houses in Kansas City over a 5-year period. Purchased about 30 houses that were remodeled and either rented or sold. At one time, we were managing 12 properties and running 2 remodeling crews. And then due to some personal circumstances that I ran into, the company was dissolved in 2007. And then I took a break from real estate because that kind of wore me out. But then in 2019, I had a good friend that wanted to get into real estate, and he was looking to do a process similar to what I did in Kansas City on flipping houses, but he needed some funds to get started. And he's actually a Jeeping buddy of mine. We did a lot of off-roading together, and he was parting out his Jeep, and I said, I can loan you the money. And he came over to talk to me about it. And in talking to him, I realized how much knowledge I had acquired about real estate and decided that it might be a good opportunity to retire earlier than what we'd initially planned. And so my wife and I, Michelle, started attending some free real estate presentations and ran across one that had to do with commercial properties. I didn't know anything about commercial properties at the time. So we attended it. And before the meeting started, I was talking to the presenter and told him my background. And he said, yes, I used to have single family homes, and I was managing around 40 single family homes myself, and it was just wearing me out. And then when I was introduced to multifamily, I realized that one multifamily could produce the same revenue with one complex of 50 to 100 units that all my single family could. And he said, I've never looked back. And that made a lot of sense to me. And so after the presentation, we signed up. And at the first event we went to, one of the things that they asked us is, why do you want to get into real estate? And so we talked about it, and it was really, we didn't like asking permission to take vacation or taking a day off and then having the company decide yay or nay. And we wanted to have more control over our schedule and over our lives. And so the second day of this 3-day event, after the event, we were on our way to dinner. And my wife said, why don't we call it QMJ? And I said, QMJ, what the heck does that stand for? And she said, quit my job. And I loved it, so that's what we went with. So the name of our company is now QMJ Properties. And we've managed to get to a point to where we are full-time in this, and we really enjoy it. And it's given me a whole new passion, being able to talk to people and help them, get them involved in our investments and help them make money along the way. So a lesson I learned during my single-family real estate is it's not good to go it alone. I tried reading some books and jumping in and going it all alone, and that didn't work so well for me. And so this time I'm looking for experts that are experts in their particular area. And that's what we've done with this team, Solid Door Investments. Rebecca has a background in real estate business management from college, and she's been an assessor for many years before getting into multifamily real estate. And she's an excellent underwriter and excellent at all the financial aspects of the operation. And Brian Ayers, who is teamed with Rebecca in Solid Door Investments, brings in a commercial background, and he's able to look at the property and see what needs to be repaired and be able to assess repairs and manage those repairs, and does an excellent job at the asset management portion of the business. And then we've teamed with Kathy Fontana of Class A Management, and she's been doing this for 40 years, has an excellent knowledge of all the markets in Texas. She's currently managing around 5,000 doors and is an excellent resource when we want to know what the values of a certain area are and what the average rents are. And so we have an incredible team that works well together. We focus on very conservative estimates. We always want to outperform and keep our investors happy for a long-term relationship. It's actually a pretty simple concept, and it's a way to allow passive investors into our deals and let them participate in the tremendous advantages of multifamily without having to actively participate. And I know firsthand what actively participating means as far as hours and commitment. And so we present this opportunity as a way to join our syndication and be able to be involved in the property without having to take an active management role. Investor wants to do it alone, they can. And the aforementioned friend, who's still a good friend, has experienced a lot of the pitfalls with that, as I did the first time around. Knowing how to buy and where to buy without a lot of experience, jumping in and finding out that the repairs cost more than you thought, the property is not worth as much as you thought. There's just a lot that you have to know if you want to do it on your own. By joining a syndication, you're leveraging our experience and our knowledge of the market to make money without having to take the risks yourself. And with the way that we have our syndication set up, we are taking the majority of the risks. We always pay our investors first, and that's the way that all of our documents are set up, that you get paid first and then we get paid, because we feel like if we're not operating the property as well as we should, then we should be the ones impacted by that, not you. So we set up our structures so that you will get the returns and you will want to invest with us again in our next deal and the next deal and the next deal, and be lifelong partners. We're not really looking for short-term partnerships. We want the long-term partnerships. And this is a way that somebody that has no knowledge of real estate at all can participate. And once you set up the paperwork to join the syndication, pretty much you just sit back and wait for the money to roll in. And I love checking my bank account and seeing that another distribution was posted to my account and that, hey, I made money last night while I was asleep. So it's a wonderful experience when the dividends start rolling in. The name of the property is Palm Shore Apartments. It's a 88-unit property in Galveston, Texas. It was built in 1968. The original construction was, there was two different apartment complexes that were right across Church Street from each other, but they've been combined into a single asset now because at 88 doors, it's much easier to manage than two smaller ones. This Class C property has a lot of value add and is in a great location in Galveston. They've done quite a bit of upgrades to the exterior and they've done some of the interiors, but there's a lot of opportunity to continue their value add model and upgrade the rest of the units. And we're looking at $150 premium per unit for the upgraded units. So we're excited about continuing that model that they've demonstrated works on through the rest of the property. On this property at Palm Shore, there have been quite a few improvements already made. They've spent $85,000 on the exterior and siding repairs, another $85,000 on roof repairs and replacement. perimeter fencing of $24,000, parking lot resurfacing of $16,000, HVAC repairs of $14,000, and plumbing of $13,000. So some remaining value add opportunities that are left is we can upgrade the units because only 34 units so far have been upgraded. We can upgrade the other 54 units and get a 150-month premium over the non-renovated units. In addition, we have the option to install washer and dryer hookups in about half the units to give us additional revenue. And then we have exterior projects that we want to do as well. The covered parking, almost all the spots have covered parking, but the covered parking on over one of the parking lots needs to be replaced because the support beams are starting to rust. And so we plan on addressing that as well. And then we are looking at adding a Wi-Fi and internet cable package, and we feel like we can get an extra $40 premium. And then on those units that we put the washer and dryer hookups on, we can rent out washer and dryers at $40 a month. And then also right now, the complex is paying for the water. And so we're looking at implementing a RUB system so we can charge back for the water. And the combination of all these, we feel like we can increase the value of the asset by over $4 million with these upgrades that we can do. And so we're excited about the potential there. And one other thing that I would like to talk about is, I know some people are concerned about Galveston being a place where hurricanes often hit. So what we do to mitigate that in this property is that we have the storm surge insurance so that if a hurricane does come through, then we will be covered for any damages to the property itself. And then we require each tenant that comes into our property to get renter's insurance. And what the renter's insurance covers is not only their belongings in case of an event that happens to their particular unit, but also if it's not able to be, if they have to get an alternate residence, then the insurance will pay up to 12 months of rent premiums for them on their behalf. So in the case of a hurricane, we don't expect to have any lost revenue because of these insurance policies that we have in place. So Galveston is an island south of Houston, and it's about a mile south of downtown Houston. We actually live in the north side of Houston, and it's about an hour and 50 minutes from our house. It's a popular spot for everyone in Houston to go for a weekend getaway. They are landlocked, so that's an advantage of this property, is there's only so much land that is fully developed, and so we have an asset that will not have any new doors anywhere near it because of all the ground already being covered. Galveston is a launching point for a lot of the cruise ships. They have actually upgraded that facility so now they can board 3 cruise ships at a time. And they also have the University of Texas medical branch, which is the largest employer on the island, employing 13,000 employees. And it's only 3 blocks away, 2 to 3 blocks away from the property. So we have quite a few medical students and people that are actually working at the hospital after graduation that live in the apartments. And it's on the east side of the island, so it's not where they get a lot of tourists walking through the area. It's really where a lot of the locals live. And our apartment happens to be one of the ones closest to the campus, along with Stewart Beach, which is only about 3 blocks south of the island and also is very walkable. And it's probably the nicest beach on the island. In addition, there's a Walgreens about a block away, a grocery store about 2 blocks away, and a credit union about 2 blocks away. And once you get on the seawall, which runs along the beach, there is all kinds of restaurants along the seawall. And there's about 5 or 6 restaurants within a 10-minute walk of the property itself. So it's a great location, and a lot of the people there hardly ever drive their cars because they're able to walk to everywhere that they need to go. So We really like the location. It's a great place. And a lot of people, once they move there, they never leave. They just want to stay at Galveston. Well, let me start out with a little bit of the history of this purchase, because we do not strive to be the biggest company out there. And a lot of people getting into this industry, they say, yeah, I want to get to 10,000 doors or 20,000 doors, and I want to be the biggest and everything. We don't. We want to be the best. And so we are very, very selective in what departments that we find. And if we can't find a niche deal, then we pass. And so we have a lot of brokers that say, yeah, you'll never find a deal like that, but we do. This deal in particular, our property manager, Kathy Fontana, who's part of the management team, has a property in Galveston already, and she had talked to several property owners in the area a month before this property became available. When one of the brokers threw this deal out, both Rebecca and I called her almost immediately. In fact, I called her about 3 hours after the deal popped up, and Rebecca had already called her. And Kathy had talked to this property owner just the month before and said, hey, if you ever want to sell it, let me know. And she went back to the property owner, and he agreed that he would sell it to our team. And so because of that, when we put together the LOI, we got great price and great terms because of the pre-existing relationship, and because the owner trusted us to be able to take it to the closing table and get the deal done. And that presented this unique opportunity for us. We're purchasing the price at a price of $7,418,000, which comes out to $84,295 a unit. That's an excellent price for Galveston because of the limited inventory that's on the island. The loan is a Freddie Mac loan. It's the loan to value on it is 78.5%. And the total amount is $5,823,000 at 3.75% for 10 years with a 3-year interest only period. And the amortization schedule for the loan is 30 years. So currently the property itself, the occupancy is 93%, which is slightly above the average of 91 for the area. And the effective rent per square foot is $1.31, and two comparables that are both similar age Class C properties average $1.48 and $1.50 respectively. The raise is we're raising $3 million, and we're offering 2 asset classes to choose from. So the first asset class, the Class A, is a 10% annual return with dividends paid monthly. And that's one where you don't participate on the back end. These types of offerings are becoming more common. So this operates as you get the cash on cash, but not the return at the sale. But a little higher cash on cash than the Class B, which gives you a 7% cash on cash. And when we return your investment, we give you another 12% for every year that you're in the deal. So if we hold it for 5 years, the hold period is projected at 5 to 7 years. If we hold it for 5 years, and that means when we sell or refinance property, then you'll get an additional 60% back on top of your 7% annual yield for a total annualized return of 19%. So the way that we structured this is we do really like the deal so much that we do want to keep it long term, but we know that most investors want to go ahead and get their return and move on to the next property. And so we have this unique fixed return structure to allow us to refinance the deal at 5 to 7 years and return all of your capital and give you your full 10% or 19% average annualized return, and have the option of continuing to hold the property after we return your capital and return your returns. So that's why we set it up this way. It is a unique opportunity that you know that you're getting the 10 or 19% instead of saying, well, we think it'll be about this, and then having the chance that it will be way short of what was projected. And on top of that, the capital stack, which basically says who gets paid first, which is spelled out in the BPM. So we return first off, we pay off the loan, which is always required, and then we pay back the Class A investors principal and then the Class B investors principal, and all remaining amounts due. And it's only after all the investors are fully paid before we take a single dime of the proceeds. And so while our plan is to hold the property if we get to the 5 to 7 year period, and maybe it's not performing quite as well as we projected, then we can have the option to sell the property so that we have 100% of the returns to distribute instead of 75% that we get on a refinance, because our first goal is to make everyone whole. And so we're not going to keep the property unless we can do that after making all of our investors whole on returning their initial capital and their full investment returns. Yes, so for the Class A, 10% return, it's a $75,000 minimum. And for the Class B, which is 7% annually and 12% at the end of the term, those dividends are paid out quarterly, and the minimum is $50,000.